Okay, and welcome back, students who are taking financial accounting. And in this series of videos, we are working on the assigned homework problems from the digital study guide for Chapter 11, the Group B exercises. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, then there's one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you do not understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor. All right, so for this exercise 1-24, it's asking us to prepare, get my pen, prepare the statement of cash flows using the indirect method. And it's giving you the income statement, additional data, all right, and then it says use the indirect method, calculate Snyder's free cash flow from the year ended, and then evaluate the cash flows for the year. In your evaluation, to mention the three categories of cash flows, as well as cash flow, free cash flow, and give the reason for your evaluation. All right. If you were doing the short exercises and you watched the videos for me working out the short exercises, what you saw was me saying, okay, I am not going, when I'm doing this work on a piece of paper at my desk, and it's only for me, these are my working papers. Okay, and my working papers, you know, I take liberties. I mean, I'm not creating a formal financial statement. Yeah, so I'm going to abbreviate. I'm not going to be so concerned with a lot of formatting issues, okay, on the financial statement, because they're my working papers. And if you saw me work through those exercises, it'll look pretty sloppy, okay? Yeah, that's because of the digital pen and things like this, but, you know, it is, you know, the work is done sloppy. But I also had said that if I'm going to take that information is my information. It doesn't go to anybody else. If I'm going to give it to somebody else, then I have to create, you know, the formal statement of cash flows. Meaning, if you do a homework assignment on it or you have an exam, okay, and you're going, you know, you have to create one, you need to create it using the proper formatting. All right, you don't just turn in your working papers because, you know, quite honestly, you know, you should get a 0. All right, and even though they're my working papers, and even though the content is right, you don't, you know, these are professional papers. All right, you need to create them in, you know, following the correct formatting. So the issue becomes, well, I'm using the work, you know, these are my working papers. This is my scratch. This is my draft. Right, that's another good word for what you're doing. You're drafting up the information. Okay. But it's not presented in the proper manner, right? Well, to be honest with you, it takes a lot of time, all right? So I don't have a lot of time, and in that interest, what I'm going to do here is, right, for example, it says here, prepare the statement of cash flows for the year ended November 30th using the indirect method. So what I've done is I've reproduced the solution, all right, and I'm going to bounce back and forth so that I don't spend an awful lot of time recreating it in this manner. Okay, my working papers are awfully sloppy. Okay, and as you saw, it took, you know, it does take a lot of time, and so in the interest of saving time, this way I don't have to be writing, you know, all of these here line items. Okay, I could just go down and explain what I need to explain in order to arrive at whatever it is that we need. Okay, so going forward, this is the way, whenever I have to create a statement of cash flow, this is what I'm going to do. I'm going to reproduce the solution and work off of the solution so I save time. Okay, all right, so with that said, when following the process, number one, I put in the heading, and the date, the heading date is the same as putting the heading date on your income statement or your statement of retained earnings. It's always for the year ended, for the period ending, for the month ending. It is not like just a date November 30th, which would go on a trial balance, or as of November 30th, which would be on a balance sheet. No, it shows for whatever period is ending. That's how we do our income statement, statement of retained earnings, and our statement of cash flows. Then the second thing is I create the structure by putting in the operating activities, investing activities, financing activities, and last, the net increase or decrease. Okay, if you watch previous videos, I've said it 2 or 3 times before, most homework problems show an increase in cash. Well, what happens when you have a decrease in cash? You don't write net increase when you have a decrease. So just be aware of that. Okay, so you set up the structure, and then the next thing you do is you go down through all of the line items and decide which ones are applicable that should go on your statement of cash flows. All right, so in this case here, net income, if we jump up, we see our net income is $93,000, and so we stick it on our statement of cash flows. Okay. Then we have our adjustments to reconcile the net income, and think about what this is saying. You're adjusting to reconcile your net income to cash, okay? Because remember, your net income has non-cash items in it, okay? And you're trying to get to the cash position, and that's the underlying concept of statement of cash flows. How did we arrive at cash? So we're reconciling the net income to cash provided by our operating activities. So what are those operating activities? Well, the first one we look at is depreciation expense, and we have $19,000 here. Well, if we were doing this, we would come over to our income statement, and we see our depreciation expense here is $19,000, right? So we put it on there. We look at our next our checklist of activities. You're not always going to use all of those activities, and you're going to have some activities that are not on the checklist. So you have to think, really look at the information. The next thing we have to look at is our accounts receivable. Whoops, wrong way. Our accounts receivable. All right. So we had a beginning balance of 55 and an ending balance of 40. Okay. And so we have here the beginning balance is 55 and the ending balance is 40. So 55 less the 40 means it's decreased 15,000. So that's how we arrive at our 15,000 as a decrease in our accounts receivable. The next thing we look at is inventory. Okay, so in our inventory, we have 24,000 and 38,000, right? So 38 less 24 is 12,000, right? No, 14,000. Do the math right. So our inventory increased, but that's a negative number, all right, because we're paying cash in order to arrive at inventory, to get our inventory. So we're decreasing our cash position, so that's why it's a negative number there, right? Then we look at our accounts payable. Now, yeah, it may seem like I am going down through, I'm looking at this, and since I'm looking at the solution, I already can see what line item I'm looking at, like in this case here, accounts payable. But remember, you have that, that checklist, that exhibit with all of the different activities on it. So you would go down through that template and go line item by line item, and you'd look at your information here and figure out what it is that you need, and then you would put it here on your statement of cash flow. Just so happens we've already created it. All right. So our accounts payable, we have 36,000 less 27. All right. So that's 9,000. Right. And since that is an increase in our accounts payable, that's an additional 9,000. And then we have to look at our accrued liabilities. The difference between 25 and 12 is 13,000, right? So we subtract out, whoops, okay. We subtract out the 13,000, and that's for this particular, for Snyder Services here and the information that we're given. We don't have to look at anything additional. Now notice they gave us an income statement, but they didn't give us a balance sheet, right? If it was on the balance sheet, we'd be doing a lot of other different calculations, but they just gave us this information, and they're also giving us this information here that we're going to use because we don't have, they're not showing us the balance sheet. So once we've have our figures for our operating activities, we do the math, and we end up with 16,000, and so the net cash provided by our operating activities ends up being 109,000. Right? Now, if it was me personally, I would not have the 93,000 in this column. I would actually have the 93,000 in a third column. So that I can, I would have it in the same column, all right? I would have instead of putting the 109,000 in the second column, I would put the 109,000 in the third column, so that I would just have my operating activities here, I'd have my investing activities here, and my financing activities here. I'd actually use 3 columns instead of 2, because why? Multi-step. Whenever you have a mathematical calculation, move one column to the left and put your answer on the right. But it's not wrong the way it's presented. Okay. Since, as you can see, we end up with our operating activities here, and then we still have our financing and our investing activities here. So anybody who's looking at it knows that this here underline means that this was a mathematical calculation, and this was the resulting figure that you're going to use with the 68 and the 19 to get it 60. All right, so that's just a personal quirk of mine. I would have done it in 3 columns, but having 2 is just fine. All right, so then we move on down to the investing activities, and you see the acquisition of fixed assets. Right, so when we're looking at the data here, whoops, erase all of this. We have the acquisition of fixed assets, total 102. Of this amount, 87 was paid cash, and 15,000 note payable was assigned for the remainder. Right, so the 87 was paid in cash, and that's the amount that hits our statement of cash flows. Excuse me. Then we have the proceeds from land. Right, proceeds from the sale of land totaled 19,000. No gain or loss was recognized on the sale, so it's just a straight 19,000. Right. And those are the only 2 investing activities that we have to concern ourselves with in the data that's given for this particular company. Right? So the total of those 2 is 68,000, a negative 68,000. Right? Now remember, negative 68 because the acquisition of the fixed assets, we're paying for the fixed assets. We're decreasing our cash. Okay. And the proceeds from the land, when we sell the land, we don't have any gain or loss, all right? But we're selling the land, so we're getting cash, all right? So we end up with a decrease in our cash from our investing activities. Now, for the financing activities, all right, we end up looking at the issuance of common stock of $50,000. Okay, so we received cash for 50,000, so that's why the 50,000 is here. Right, 50,000 is here. Right, oops, wrong way. Then we have a payment of long-term note payable for 15,000. That's money that's leaving the business, right? Because we're paying off the note payable. Right, so that's minus 15,000. And then we have a payment of dividends of $16,000. Cash was leaving the business, right? Always think about what the effect is on cash. Even though it says payment on dividend, right? Payment, proceeds, right? Proceeds coming in, payment going out, payment going out. It's what is our effect on cash, okay? So those three totaled up, and you end up with 19,000. Now, like I said, you're going to add the 109, the negative 68, and the 19,000, and we end up with 60,000 as the net increase in cash. And just like I said at the beginning of this video, be careful, because the homework generally deals with increases in cash. If this happened to be a negative number, this would say net decrease in cash. Okay? So then we we know that's the increase in our cash position, right? And when we have a beginning balance of 11,000, right, from November 20th, 2013, right, right here, cash, right, from 2013, our ending balance is 71, all right? Well, if our cash balance is 71 ending, that's our double check figure, because if we start out with an increase in cash, if we start out with 11 and we increase it by 60, that means we've increased our cash to 71, and that figure there should tie out with this figure over here, okay? And that's the reconciliation aspect of it, to make sure that you're correct. If you're not getting that number right, if you come up with 70,000 instead of 71, you have a mistake somewhere. Remember, the whole idea behind the statement of cash flow is to reconcile, not reconcile, is to, well, to a certain extent, reconcile your cash, okay? But to explain, the change in your cash position, okay? And you're doing that by looking at, all of these different activities that affect your cash position, all right? So that's why you go down through the checklist, all right? And you also have to, pay attention to your particular set of books, your particular financial statements, or your ledger accounts in your business, right? Because no one business has all the same accounts and all the same transactions. To be honest with you, if you're in the workplace and you understand these, this is sort of like a basic fundamental template that you're just getting drilled again and again and again. When you get into a business, you're going to look at their statement of cash flows, and you should be able to apply your understanding of this to that particular business. And any variance, any activities that are different from this basic understanding, you can take a look at it and go, okay, I understand. And that's going to mostly be, obviously you're going to create your next statement of cash flows, and you're going to take into consideration that variance. And then if you have any new transactions, new activities that occur in that particular business, well, then you're going to have to add it to the statement of cash flows. But you can almost use the statement of cash flows from the previous accounting period as a template for what you should be looking for when you're creating a new statement of cash flows, all right? It doesn't vary that much. It's just basic, generation of the initial statement of cash flows. Right. So with that said, I'm going to pause the video here. If you didn't understand something, go back and honestly do the short exercises again. Take a look at them. Watch the theory videos. And if you're still not getting, that should help. And if you still don't get it, then feel free to contact an instructor.